Hello, everyone. Welcome. Let's get underway with today's session. Market conditions remaining bullish in this bull market, sitting right at 23.16 certainly on the upper end of this momentum line. Here we've had a really nice rally, really for the last 18 months or so, and continuing with some breakout. Had some good news yesterday regarding inflation numbers. The market liked that. We saw momentum shooting up into that upper range, getting a little bit of a retracement back there today. Also seeing breadth really just kind of sitting right here in the middle. That's been one of the biggest issues as of late, is that this rally is not, there's not as much participation in this rally on each of these new highs. Price is moving higher, but participation is not moving higher. And we know that, and we've talked about that for quite a while, where the vast majority of the move that is happening in the S&P 500 is by a smaller group of stocks. Let's look at sentiment also in that upper range. As I've mentioned before, that one's a slower moving indicator. It's still bullish, still positive, which as of right now, that's a good thing, because we're wanting more bullishness. We don't want fear to come back into the market quite yet, or we're just not seeing it. I guess it doesn't matter one way or the other, but we're not seeing fear yet. That means that there's still that potentially buying on the dips or the fear of missing out type of rallies that'll pull some money in. I do think that we are in the later stages of this move. It could certainly move higher based on these inflation numbers. If we do see the Fed start to cut interest rates going into the fall, then markets may like that for the next 12 to 18 months, particularly if we continue to see corporate earnings and corporate profits, things like that, continuing to do well. That being said, it's at the top end of this range right here, and we need to be aware of that and cautious and paying attention to that market activity day to day. We did have a nice shift on the buy-sell ratio yesterday, back up to 0.71. These two starting to curl back together again. A decent move back to this, a bearish move as it was expanding, getting to this upper range here. And so we'll see if we get enough bullishness back into the market to pull this back to positive. If that does happen, we start to get that bullishness back in for maybe a blow off top here over the next few weeks or months or even years. We'll see. We're not going to go aggressively bearish until the market lets us know, and that's not as of yet currently. We also know, as we've been talking about, this is going to be one of the issues that the stock market is looking at, and that is this yield curve. Short end of the yield curve paying 5%, longer end of the yield curve paying less than that. That's an inverted yield curve that's got to correct itself for economic conditions to ultimately improve, or at least be in the best scenario. They don't necessarily have to change a lot, or even at all, because companies are agile. Companies shift and move around and do what they got to do. So same with consumers for the most part, but it'll certainly slow things, and it has. We're seeing that in those CPI numbers yesterday that were in the 3s instead of in the 8, 7, and 8s, and working back towards 2. And that's ultimately what the Fed wants, is inflation rate of around 2% is what their mandate is. Sentiment sitting towards the upper end of that range, approaching at 82 now. We haven't been in that upper range for a while, but this move higher we could see those levels. Let's look at S&P 500. Well, we do have on the index page, we've got the NASDAQ 100, which has got the buy-sell ratio of 2 to 1, where everything else is less than 1. So that's also another indication of what's leading the market. These 38 stocks right here, they're all leading the markets right now. And obviously Nvidia having its historic run still, Micron, which is in that space as well, semiconductor space, Western Digital in the storage space. We're seeing Seagate, and then we've got all our traditional Amazon. Netflix is actually doing pretty well, just about ready for a breakout pattern on Netflix. Interesting pattern there on Netflix for that particular trade. Costco even right here with this upper momentum zone. So some really high quality names. Those are just really a fantastic group of the who's of what's working right now. And so that list that's a it's a quick place to look as well when you go to this index page and looking at any of these indices and seeing which ones are leading, and then focusing on those. Obviously, a lot of these, if they're in those upper ranges, are going to be in the muscle stocks group. Sometimes this muscle stock group, and a lot of times you'll notice additional names that are not in there, but they're even a lot higher ranked. That's because they're a lot smaller companies, or they're not a part of those indexes. And so they really have some potential for really moving quickly. They're very aggressive trades, but those are really high reward to risk trades. For example, IREN, which has been moving big this last few weeks, from 6 to 14 just in about three weeks. And this overall 1 year time frame, it's also breaking out. It's gone straight up right here. Obviously, that's a little bit aggressive, but on massive volume right here in that crypto mining and data center space, that's really taking off right here. And so those names are starting to show up. Those names will show up in this muscle stock tab. A lot of times those ranks, they'll be, these are going to be 98 or higher, and you get stocks that are moving into uptrends really early. For example, FTAI, let's see, take a look here if this is a good example. If you notice right here on the chart, let me circle it for you right here, and that is this rank. Okay, so the rank of this stock, when I mouse over, this box is going to change. Okay, so what I want to do is I want to go back and I want to look at that rank 6 months ago down here. Notice it says 97, and as I'm moving the mouse higher, 98, 97, 96, 95, 96, 97, okay, 97. This stock, as it's continuing higher, so it basically went from 50 to 90 with a rank of 90, somewhere in the range of 95 or higher, all the way along that move. So you'll get, oftentimes when you have a high ranked stock, I want to go back even here. So 97, 97, 97, and then it had the retracement. When we're looking at charts, it's always an interesting perspective, because we're almost always looking at the chart from here. And this point, if we were to drag that all the way back to here, and we'll do that in just a second, we can see that our perspective gets skewed a little bit to what is high. Okay, and so those ranks can ultimately move higher as long as it's a strong ranked stock and the company is continuing to perform. Then I want a highly ranked stock because of this potential. It can move and move and move and move, and for whatever reason, the market is very interested in some of those names. Sometimes they don't last, but most of the time, that's why those highly ranked stocks are the most interesting to focus on as they're in the upper momentum zone, because they often will continue with that momentum quite strongly. Let me go out to the 2 year time frame on this chart, and this has been a great example and a nice little chart, nice trade. But let's come all the way back to here. Okay, so if we were looking at this chart and we saw this thing today, and we were looking at it saying, oh, okay, it's in that upper time momentum zone, it's pulling back, it's finding support. It doesn't have a confirmation bar quite yet, but let's give it a day. Okay, there's our confirmation bar. Let's look at the rank of that. We've got increased volume, we've got a bullish bar moving back up, and the rank on that is 98. I'm looking over here and I'm mousing over this right here. So as we're looking at this chart and we're thinking it's at 36, and we're thinking, gosh, this thing has gone from 17 to 36, and our brain thinks that this is the only world that this price and this stock can live in or has lived in. Okay, well, and that it's got to go, what goes up must come down type of idea. But that's not the way that stocks work. Okay? Yes, they do go down, but good stocks that are going to continue their advance and continue their trends will do so already strong in most cases. So if I were to look at this stock now and continue to move on and say, let's say we bought that trade, that would have been a perfect example of a new entry off support, new confirmation bar, increasing volume, a nice location to set a stop loss, because we would buy here and set a stop loss just below this 236 location. And from here, let's look to see what would have happened. Okay, there it goes. There it goes. There it goes. Now we're thinking, good grief, we've got some profits. Should we take them? And that's always okay. You know, it's always okay to take some of the gains off the table without taking the entire position or leaving a runner. We want to sell some of the position into strength to either rebalance or just to take some profits off the table and then allow for a trailing stop on the rest. But we'll continue to sell as it continue to do well at certain locations on the uptrend. Okay, so now here we are, still moving, still moving, still moving. See how the perspective now, this was where we bought in. And so when we're looking at charts, that perspective of how high is high. This was high at this point on that chart pattern, but that's not what we're looking for. What we're looking for is we're looking for stocks that are already in strong momentum and then anticipating the continuation of the momentum. That's why it's easy to go back and draw a chart and say, yep, this is where we would have bought, or this is where we would have bought. But it's, you know, in the moment, in the heat of the moment, when the chart looks a whole lot different, can we pull the trigger on that? That's what we've got to get comfortable with, to say, what is it that we're looking for? Number one, what is the price pattern? Where is our risk parameters? What's our stop loss level? What's the position size that we're going to be entering into that? Okay, and in most cases, it depends on your portfolio strategy, but in most cases we're utilizing, if we're using a wheel portfolio method, which is buying something every day, we're adding into a portfolio every day, then we're using the 2 to 2.5% portfolio at risk. Okay, that means if I have $100,000, then I'm going to put $2,000 into a trade, and I'm still going to have a stop loss on top of that. So for the most part, we're usually risking about $300 per trade, which ends up being about 0.3 of 1%. So the total portfolio at risk, I should say position size at risk, 2,000 with the stop loss included, is going to be about this. Those are typically the kind of the default risk parameters that we recommend or utilize. And if you want to take more risk, then you make the changes here. Ideally, you bump that up and say, I'm going to do 3%. So I'm going to have a $3,000 trade, which means that this would also go up to whatever that's going to be, 400. Okay, or if I go up to 5%, then this is going to be 5,000, and this is going to be, I don't know if that's exactly right, but 600. Okay, so we're increasing our risk. We can also increase our position size and keep this number low by tightening the stop loss. We can take a larger position and a smaller stop loss and keep this number the same as well. We may get stopped out sooner, but if we want to be very consistent in our risk management as far as this number is concerned, then we can do that with adjusting the stop. Let me actually go through that and walk through that. Let's see. We'll just use this as an example, even though it's not where we would buy it. This is where it is as of now. So it went from $30 to $80 from November of last year, and it can just continue to move higher and higher and higher. So it was already one of the leading stocks and strong stocks into last summer, into the retracement, and then moving higher going into this year. So let me explain that allocation. If I had 100,000 and I had, I'm just going to figure out here, let's go 50, let's go 20, 25, 24. Let's stick right at 25. I'm looking at this number right down here, this 2%. Okay, so my position size, I've got to change the number of shares that I'm buying. And it's basing it off of this current value. Okay, if I have a stop loss that is going to get this number down to 0.3, let's see what that looks like. Let's see. Okay, that's even 80. Oops, it's not gonna make any sense. What am I doing? I gotta go below it. There we go. 70, 75. Come down. We gotta go 74 right there. So in this case, if I were to buy this stock at 85 with 25 shares and a stop loss at 74, so I bought it here. Stop loss is all the way down at 74, which is right here. I'm risking $291 on this trade. or really close to that 0.30 number. Now, if I wanted to keep this number the same, or rather this number the same, but I want to take a bigger position, okay, than 2%, then let's walk through that as well. If a bigger position obviously is going to be this number here. If I go from 25 to 35, notice that that takes my number to 400. I'm increasing my percentage at risk by increasing the number of shares. If I want to keep this lower, but I want a bigger position, I've got to tighten the stop loss, meaning I've got to raise the stop loss higher than 74. So if I raised it up to 75, taking it down. If I raised it up to 76, now we're a little bit closer. So you can see I have to move my stop loss closer to my purchase price if I have a little bit larger position. And those are the two levers that you're pulling on to be able to manage risk. Position size, how many shares am I buying? What's the amount of my overall capital that I'm trading? And my stop loss, where am I placing my stop loss so that, you know, if it reverses, I'm protecting that capital and I know what my risk is pretty consistently, so that, you know, if we're wrong, we're out, you know, 3 or 4 or 5 of these, and then we get one that we get a real big winner on. Oftentimes, if that, you know, we'll get some losers, but we want to make sure that we keep those losers really small and that we're cutting them off before they turn into a big loser. Okay, and that really is the answer in money management, is making sure that your position size is sound and consistent and the same, and that your stop losses, that you honor your stop losses. You place them below a location around that 236 or around a low point. Typically we'll be buying into at a pivot point, a reversal, so we have a hold low point that we can set a stop loss at and stick to those. Okay, there's going to be times where we get stopped out and the stock turns and moves back up. So what? We honored our stop loss first, and then second, if we want to get back into it, we can. That happens all the time. But I don't want to get married to the idea of owning a certain stock and being right or being wrong, or being, this is, you know, going to be doing this, or I heard this, or, you know, there's a million reasons why stocks do what they do. That's why we focus on the current price pattern, where if it's strong, if it's moving higher, if there's overall interest in that stock. If it's a large cap stock and it's up in this upper rank, there's interest. There's big time interest, because the, you know, big players are pushing that stock higher. We want to just piggyback on top of that. We want to be a part of those trends. And obviously this is later in the trend. I don't know that I would be really interested in this one at this point on this 2-year time frame, when we're clear up above the 236 right here, and, you know, and it's starting to go parabolic, starting to move like this. And we want to catch them a little bit earlier in those bases, a little bit earlier to this move, and then a few moves along the way. So if we have a decent base, or we have something that's had a sell signal and it's coming out of that, then we can buy it several times along the way. This is getting a little bit risky, particularly where the market is right now. But maybe it won't be. Maybe it'll shoot from 80 to even higher. But it's got to have a little bit of a retracement for my comfort zone. I would prefer to have some for that point in time. And so sometimes we miss out on things that we should have gotten back into here. And if that's the case, and you feel like you're missing out on trades, then just be a little patient, or add it to a watch list. It'll come back. It might take a few weeks in most cases. Or if it doesn't look like that and the market is really strong, you can always buy a smaller position, by half the position that you normally would, even because it may be a little bit extended. If it does trade back, you can add in the other half. Let's see. Let me jump over to, let's see. What did we talk about on Tuesday? We talked a little bit about weeding the garden, weeding the portfolio, and that is if we have some things that are not working and we want to free up some capital, then we can start at the bottom, start with what's not working. Some of these are relatively new trades, so we want to allow them a little bit of volatility before we make a decision. But some of the ones that have been in there for you know, a week or two and they're not moving, then we can always just trim the losers, trim the ones that are not performing as of yet, keep the ones that are, and then trail the stop on them. So for example, NVIDIA, we did buy this move right here, and our currently have a stop loss updated to this 108 area. Okay, and we sold 25% of the initial trade right into some strength. It's either here. I think it was right here, the split day. So sold 25% into some strength, locking in some of those gains. We've now got trailing stop on the rest. So it's the management process is the same for every single stock that we're owning. You just own, or you're adding into those each day, or building a portfolio around this certain process. So back here, this was NVIDIA's turn. NVIDIA's turn to have a big run up. This is called a wheel strategy, a wheel portfolio. And for the most part, we've got a Discord channel that you can be a part of as well, that we set these up every morning. So we go in, I'll look for these setups, we'll add the buy location, we'll add the stop loss, the number of shares. It's an actual portfolio that we're managing. It's actually this portfolio that we're managing. So you can see the entire process in that wheel, in that Discord room. Let me jump over to, let's see, what else did I want to talk about today? Really, that's, really the core right now is we're in a bullish trend. We're moving higher, S&P 500, watching for that continued strength on buy-sell ratio, watching for S&P, this chart pattern here. You can see that nice breakout pattern. I come into this, there's that gap. It's just a strong market, and we want to continue to participate at these levels, even though these levels become a little bit tougher to trade at because we think it's high, right? We think it's high, but the blow off tops happen in a crazy manner. And I've read some discussion about kind of .com, back in the .com bubble, very similar circumstances where we had the Fed that had higher interest rates started lowering interest rates, and it really just flooded the market with additional money and new technology with the .com bubble. So we've got these these chips and data centers and energy, everything that's the backbone of AI is going to be in focus right here, and potentially could be a flood of new money going even into those names as well. You have huge capital expenditure, CapEx spending in a lot of companies like Facebook, like Meta. These guys are spending big time money on this infrastructure. It's not going away. It's exciting. It's really early, and the best places to be looking are going to be in what is moving, what is working, what is moving to the upside in these indexes. NASDAQ 100, these 38 stocks, NVIDIA, Applied Material. Watch for these patterns. Qualcomm's about to have a breakout right here. It's a little bit extended, but keep your eye on these names as well. These are the big heavy hitters that are really going to control ultimately the direction of a lot of the technology. Let me read a quick question here. We recently shaved some profits off IREN. What about the idea of adding to winners? So, okay, good question. Adding into winners. So in this case, if we were looking for, let's see, let me go back to here. And so adding into winners, one of the places to be watching to add into a winner is on a retracement that doesn't stop us out. Okay, so for example, we're selling, in this case, when these things go straight up, we want to shave a little bit off of that. Okay, now it's got this 6-month time frame. It's moved up here. We currently have our stop loss down. I've moved it. I think it's at 950. I'll have to double check. But I just updated it today, and so we're sitting right here at this low now. So because I don't want to get stopped out of the remaining shares, I'm willing to have some volatility at this point, this much volatility minus the 25% that we sold into the strength. I think it was here. It might have been here. It was in the last couple of days. What is today? Thursday. Might have even been back here. I don't remember now, but we're up. We sold those. So now we've updated the stop loss. And now it's going to be, if we can get a pullback let's say that it pulls back and it maintains the 236, which it should, right? It should continue to hold this level, but there's no guarantees. So we want to give ourselves enough volatility, because this thing has proven that it can tank pretty quickly as well. So as it's moving higher, then this retracement zone, we're not stopping out of it yet, but if it pulls back and finds some support here, gives us a confirmation bar, an increased volume bar, if we get the buy signal, this would be the location to add into something that's already working. Okay, something that's pulled back, it's giving you the first real retracement or pullback, and maybe it is even all the way back to here, and then you get the support, and then you get the new confirmation. Okay, that's how I would add into a winner. That might happen here, it might go up, and that might happen over here. So it can, you can also decide, hey, I like this thing, I'm going for it, it's relatively early in the trend, I'm going to buy here, I'm going to set a stop loss here. That means that my position size has to be X, because my stop loss is so wide. Okay, you can control the risk at any time. You can buy at any time and add into anything at any time. It's just about, where do I want to place my risk because of the probability of a retracement. If I said, I don't care if this thing retraces all the way back to my buy point, and I'm going to just buy it today, then that's fine too, if that's within the trading plan and that's within the risk profile of risk management. Because sometimes these stocks, they might drop 50%, but it's this technology and crypto and blockchain and data centers, it's had a big run up here. Even pulling back to $12 would be fine. This is such a massive breakout right here on such increased volume, and allowing it to pull back, giving that retest, and then more confirmation on a retest. So that was a little long-winded answer. Hopefully it made sense. But essentially, it's on a retrace or a retest of a support zone, so that you can set up a new risk profile, or a little cleaner risk profile. What I mean by that is, if I had a pattern that looked like this, it pulled back to support, and now I get my green buy bar, and it's at this level, and I'm going to buy here. Now I know that I can buy here, and I can set my stop loss here. Then I can open up my calendar, or open up my calculator, and say, all right, what is my, what are my numbers? How many shares do I need based on that stop loss level adding into? I would want to decide, am I increasing to another 2%, or am I going to add 1% so that I have a total position size of 3%? Okay, or again, it's just a step-by-step process. How big of a position size in addition do I want? Am I going to account for the entire position, or is this going to be an entire new trade? You've got to decide that. For the risk, you'll probably will be a separate setup, where you're going to have ideally it would be at a location where you could adjust your trailing stop as well. So if you were to have a new buy point and your stop loss were down here, and now you've got the confirmation it's moving higher, and you add it in, and your stop loss on the new shares are here, and your stop loss on your existing shares, you can update that as well. Now you have a larger position with your risk profile set with the same stop loss. That's one systematic way, probably the easiest way to do it, to be able to add into that trade. I'm going to end on that note. Great question. Really, this is really a core concept. Okay? You're going to be doing this over and over and over and over and over again within this methodology, and getting comfortable with this perspective on this time frame, this 6-month chart, and being able to look at a chart with this view, with your fib levels, focusing on where we're at. That becomes our template, our framework of price structure. Inside of this framework, we want to be able to make our decisions on our entries, mostly on our management, once we get to this point here as well. That'll do it for today's update. Everyone have a fantastic day, and we'll see you next week. Thanks a lot. Bye now.